All right, guys. So I did a write up for you, and I'm just going to go over some charts really quick just to kind of give everyone reminders. Okay, so let's just do Bitcoin first because it's already here. Okay, so just a reminder, all right, where I got 73K from. Since the inception of Bitcoin, the 50-week moving average, the white line, anytime we've gotten a weekly close under this white line, you can see right here, this is a little counter trend rally, but anytime we get a weekly close, meaning it's a bar development close under the white line, it has ended the bull market. And then Bitcoin has entered a bear market, and it has taken a minimum of a year to reclaim the price it lost when it lost the white line. Okay, so here is almost 2 years, 651 days in its first ever cycle in 2014, right? So the rally from 2012 to 2014, bear market from 2014 to 2016. So then we enter the next cycle of Bitcoin that rallied into 2018, right? Rallied, 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 and then it gave up. And you can see initially defended, 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 gave up. Weekly close under, bear market. Took a minimum of 357 days to reclaim the price it lost after the bear market. 1 year. First one was nearly 2 years. This one was a year. Okay. So then we enter a bull market and we rally all the way into 2021. Okay. And you can see here we got a defense here and we got a final leg up, which is a 1, 2, 3, 4, 5. You can see that, right? And then once again, you can see no weekly closes under this. As soon as we got a weekly close right here, bear market. And you can see it took 770 days to reclaim that price. 2 years. Okay. So here we are. If I had to be real, this is 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. I can count it. Now, on the micro count, I do think it's possible that there's another leg up here, but it's not favorable because history says the second time we hit the white line, it's always given it up, just like this. So we're here, and it's not looking good, but it hasn't done it yet. But just know that we're at this white line, and if we close under it, now given when I was saying 73K, it was back here. Right now we're 76.7 with a new week. We're literally tapping it almost, right? Which means we could get this could be really bad this week. And realistically, if this breaks down this week, then we could be going into an entire bear market in the stock market too, which could invalidate a lot of my thoughts that in the write-up. But let's keep it simple. Since the inception of the chart, 100% accuracy, a weekly close under this white line, and it has taken a minimum of a year to reclaim that price. Also, anytime it's ever done this, and it's given up the white line, it's always went between the gold and purple line for support, right? So that means if we give up 75K, his 100% accuracy of the entire chart of Bitcoin says we go between 35 to 45K. Now, given this could be a little higher, so maybe 47K, but we go sub 50K. That's what that says. And then not only do we go sub 50K, but it has taken a minimum of a year to reclaim 73K if we lose it. Once again, that's if we lose it. We're going into the week. We're right there. It's not looking that good, but it is what it is. I will point something out. No, I'm not going to do that. Okay, so that's Bitcoin. Um, Let me just show you HSI really quick. All right, so world looks like it's ending, right? But let's just look really quick. You can see that the purple line is the line in the sand for HSI. So all of 2024 has essentially become support, 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 support. So even though the world's ending, it kind of looks like HSI might already be close to a bottom. Now, if we start giving this up, we could be pretty concerned, right? But at this moment, that looks like some structure there for some demand. We're hitting this line already. Wouldn't be surprised if we didn't know. Okay, so we haven't hit it yet. But essentially, we gap down. They're down 10, 11% nearly. Um, and we're near a bottom. Now, there's no way that they can go through with this tariff bullshit. Like all we're asking is for fair, but it is what it is. But essentially, Massive discount in HSI at all the level of previous supports. So this could be an honorable declarable bottom for HSI slash China. Okay, because that matters because of what everything else I'm about to show you. All right, let's do IWM. So with IWM, you can see that nothing worked except gap downs. But one thing is for certain, you can see that this is a 5-wave structure. 1, 2, 3, 4, 5, right? Massive, massive drop, majorly discounted, right? And it is what it is. But if you look, what we have here is we have the 2023, 2022 bull market low or bear market low. So we have just entered monthly demand of the previous bear market. That's got to count for something, right? Right? Like you see this? What about this, right? So this is 2020 going into the 2016 bear market low. Do you see that? Right? Let's just look at that, right? World was ending, boom, bottom of it, right? Maybe that accounts for something. That one was a panic sell-off too, panic crash. Regardless, anyways, one crash led into the monthly demand of the previous crash. This crash is leading into the monthly demand of the previous crash. Food for thought. Not only is that the case, we are also tapping the 261 retracement, and we've gotten a significant rally so far from it, right? What is that, like 4% already? 3.5%? Trying to close this gap, but it is what it is, whatever. Regardless, this is 5-wave structure. Even if this is a bearish sequence, we should at least get a 50% retracement, right? Which would say, 2,000, which would be pretty significant, be pretty much headline with the entire crash. And that's fair. And I think it can happen. I think it's going to happen. I think, this panic's about to go away as people try to make deals, and we'll see what happens. But on the technical basis, we just got a rapid rate of change, rapid acceleration. And yeah, actually, let me show you that stuff really quick. So VIX reached 45 since 1997. Anytime VIX has reached 45, this is the percent range in win rates for 1 day to 2 weeks later. It's usually called volume spikes and VIX crush. So when VIX gets at that level of overextended, usually the market has sold off so drastically and crashed so hard that there's at least a counter trend rally. And this shows 1 day all the way to 2 weeks later, you have at least a minimum of 75% win rate of the last dozen or so times, pointing that even if we close red today, a week or two rally would make sense. And for me personally, I could see this happening too. Because let's say if this is impulsive and it's a 5-wave structure. Well, if it's a 5-wave structure and it's not ABC, that is bearish, because that could mean we have another leg down, realistically. And my thought process is, if this is a wave A and it is bearish and we have another leg down and the market's going to crash and all that stuff, right? Well, since wave A was that fast, I think wave B and C is also going to be very fast. I think it's going to be created through all this uncertainty and all this fear and panicking, that it happens fairly quickly to where we could just see the most outrageous 3 to 4 months of our life, if that's to play out. Okay, but that's going too far ahead, and let's just look at the level at which we are. We've historically reached one demand zone of the previous crash, in which we're doing the exact same thing here in 2025. 2.61 Fibs extension, bouncing off it flawlessly, meaning it's algorithmic and it's planned and it's happening. And that is a one long ass wave 5, to be honest. So to me, this looks really good for a bottom with IWM and RTY. Now, let's look at SPY and QQQ. Actually, let's look at SPX. All right, this is where it's going to get a little crazy. Okay. Let me turn this off. All right. So let's play a game. Let's play the game of COVID algorithm. Okay. Let's overlap it and see what we got here. Had this for a while. And this is the COVID crash algorithm. And if you overlap it, where are we at? Essentially that bottom. Okay, let me show you this too. So the 2000 to 2022 rally is the same length as the 2022 to 2025 rally. You see that? Algorithmic, pre-planned, always been this. And I can't show you on SPX, but this is actually the same length as 2009 to 2020. Crazy, right? Pretty fucked up, but it's the truth. So if this is the same length as this, and this is the same length as this, let's play another game. Watch how much confluence this is. Now let's do the length of the retracement of the bear market, right? So if this is this length, what the fuck happened there? That was weird. Sorry. There we go. If this bull market is the same length as this bull market, wouldn't it make sense that it's possible this bear market is the same length as this bear market? Let's look, shall we? Well, I'll be damned. Look at that. So if this bear market is the same length as this bear market, right? You see that? Which is also the same length as the COVID. You got to kind of start thinking computerized here, right? All three of these are similar in length. All the rallies are similar in length. All the retracements are similar in length. So that's just as far as me identifying that part of algorithmic trading, okay? Now let's look at something else. Algorithmic trading channels, right? So you can see through 2020 to 2022, it traded in this algorithmic trading channel. And then when we broke below it, it went, oh, also reminder, these are all the same width. This is just a copy and paste overlay. You see that? So I didn't pre-draw these after the chart was developed. I literally just copied this and then just lined them up and then dropped one down. Lined them up and then just dropped them down. And then you can see it just fell into place because this is all algorithmic and computerized trading. So it breaks down, it hits this trading channel, it rallies in it a little bit, and then we break down this trading channel. When we break down this trading channel, it finally finds this trading channel's bottom right there. You see that? And then we trade in this trading channel from 2023 all the way to 2025. So now we found ourselves breaking in this trading channel, bottom of this trading channel. Supportive of maybe a bottom in the next deviation trading channel? I think so. Let me add the confluence. So now we have all these measured moves, measured rally, measured retracement, measured rally, measured retracement. Sounds sketchy, right? Look at the rate of change. Now let's draw a line. This is very important, guys. Pay attention. Let's draw a line from each bear market crash. This isn't just any ascending support. This is the 2020 crash and the 2022 crash bottom. So this ascending support is two bear market bottoms. Where the fuck are we at? Right there, baby. Okay? So we have trading channel confluence. We have measured move confluence. We have ascending support confluence. We have weekly demand zone. And oh, I forgot, we also have an SR flip, a support resistance flip of the 2022 high. Okay? Crazy, right? Let me add one more. What about broad sector deviation channel? So how I drew this one is, let me just do it like this. Oh, did I? Oh, I used that shit. It fucked me up, did it? Nope. Okay, cool. So all I did was simply draw it from the 2018 high, right, to the 2021 high. And then all I'm simply doing is lining it up with the most lowest pivot, which is the 2020 crash. And where do we get? We get a support band around this. So we have this original ascending support and we have this close to this. So I would say that this is a pretty darn good area for a major bottom, right? Now, I was trying to identify bottoms over here with these demand zones. but the VIX was too high, which is what I mentioned, right? It literally broke through that one, broke through this one, broke through this one, right? Because demand zones aren't as important as literal measurements of their trading algorithm. So it broke through all this because realistically, in my opinion, this was acting as a magnet. This was always the goal, and they just were able to get there faster. So that's that. That is a lot of confluence for a very high probability bottom. But let's look technical, right? So actually, let me do this. I'm going to give you a little delete. I'll fix that. So here's a monthly demand. So currently we're in a monthly demand. If we are to give up, like let's think if in our worst case scenario, if we were to give up 46.50, okay, or 465 on SPY, this is the next one. So then we're looking at 410 to 440. So if we give up 465, we're looking at 410 to 440. If we give up 410, we're looking at 350 to 390. Okay, so these are major crash levels. I'm thinking we stop here. Even if we're meant to go lower, I think this is a corrective area where we should at least, hit up here maybe 550, 55.50. I think that's a very prominent level. I think that's a very logical level that it would hit. Because I do have to be real, a lot of this stuff does look like five-wave structures. Tesla is, by the way, that looks like a head and shoulders. Look at that. Not pretty at all. But that kind of looks like a five-wave structure. And if that is a five-wave structure, then our target of 185 area will likely be hit. But what's most scary is if that actually is a five-wave structure, is it could be one of these. I don't think that's it. I'll be damned if that's it, but we'll see. We'll see how today plays out. Another one is this. This also looks like a five-wave structure. 1, 2, 3, 4, 5. So we have to be careful there. But it is what it is. Oh, I have absolute gold. I want to show you guys. Okay, let me do this. I'm so glad I almost forgot to do this. All right. Actually, I'll do it in another video. Bye.